Ever thought of multiplying your wealth? Consider this your starting point. Welcome to the kingdom of investing, a marvelous place where money does the for you. This journey commences with the nitty-gritty, the very alphabet of investing. You see, investing isn't just about stashing your cash away and hoping for the best. It's about making informed choices, about learning when to hold tight and when to move. On this enlightening voyage, we'll navigate through various paths of investment, from the frenzied pace of the stock market to the steady tempo of bonds and the touchable charm of real estate. We'll dive deep into the theories of risk and return, aiding you in striking the perfect harmony. We'll also tackle common fears and queries, debunking myths and false beliefs. And lastly, we'll acquaint you with the idea of the fast lane investing, a blueprint for those eyeing to supercharge their wealth growth. Stay tuned as we unwrap the enigmas of investing. What is investing and why should you care? A question that might seem simple yet carries a world of possibilities within its answer. Let's break it down. Investing at its core is putting your money to work for you, leveraging your assets today to create more benefits for you in the future. It's like planting a seed and nurturing it over time, watching it grow into a flourishing tree that provides shade, fruits, and adds value to the landscape around it. Similarly, investing is about taking a portion of your hard-earned money and giving it a purpose, a mission to multiply over time. Now, you might be wondering, why should you care? Well, investing is your ticket to financial independence. It's your way to build wealth and secure your financial future. It's about making your money work for you rather than you working for your money. The philosophy behind investing is grounded in time, patience, and risk. Time is your best friend when it comes to investing, as the longer your money is invested, the more potential it has to grow. This is due to the magic of compound interest, where your earnings generate even more earnings. Patience, on the other hand, is the virtue that allows time to work its magic. Investing is not a get-rich-quick scheme, but a journey that requires patience and discipline. It's about staying the course, even when the market takes a dip, and keeping your eyes on the long-term horizon. Risk is the other side of the coin. While investing has the potential for high returns, it also comes with a level of risk. This is where diversification comes into play, spreading your investments across different assets to mitigate potential losses. So, there you have it. Investing is not just about making money, but about securing your financial future. It's about time, patience, and risk. It's about making your money work for you and building a legacy that lasts. Remember, investing is not a sprint but a marathon. The journey might be long, but the rewards are well worth the wait. Investing is not just about making money, but about securing your financial future. Opening. What are the different avenues to invest your money? As you embark on your journey to financial freedom, it's crucial to have a map, and that's what we're providing today. To navigate the world of investing, let's break down 3 popular investment opportunities: stocks, bonds, and real estate. First, let's talk about stocks. When you buy a stock, you're buying a piece of a company. You're essentially becoming a part owner. This means when the company does well, your stock can increase in value. But remember, it's a two-way street. If the company doesn't do well, the value of your stock may decrease. Stocks have historically provided high potential returns, but they also come with a higher degree of risk. They are a great option if you're looking to grow your wealth over a long period. Next on our list are bonds. A bond is like an IOU. When you buy a bond, you're lending money to the issuer, which could be a government or a corporation. In return, the issuer promises to pay you back with interest at a future date. Bonds are generally considered safer than stocks, but they typically offer lower returns. They can be a solid choice if you're looking for steady income and less volatility. Last but not least, let's consider real estate. This can mean buying a property and renting it out, or it could involve investing in a real estate investment trust, also known as a REIT. Real estate investing can provide a steady income stream and potential appreciation over time. However, it also requires a significant upfront investment and ongoing management. So, we have stocks, bonds, and real estate. They each have their benefits and risks. Stocks can offer high returns but come with more risk. Bonds provide steady income with less risk but lower returns. And real estate can offer both income and appreciation, but requires more hands-on involvement. Remember, diversification is key. It's like the old saying, don't put all your eggs in one basket. By spreading your investments across different types of assets, you can help reduce risk and increase potential returns. Now you may be wondering, which one is right for me? Well, that depends on your financial goals, your timeline, and your risk tolerance. It's all about finding the right balance for your unique situation. choosing the right investment opportunity is the first step towards successful investing. But remember, investing is not a get-rich-quick scheme. It's a long-term commitment to your financial future. And with the right knowledge, you can make informed decisions that will help you build wealth over time. So, take some time. Do your research, understand the different investment opportunities out there, and when you're ready, take that first step. Your future self will thank you. Closing. Choosing the right investment opportunity is the first step towards successful investing. Every investment comes with its own set of risks and rewards. This is a fundamental truth in the world of investing. But what does it really mean? Let's break it down. Risk, in the context of investing, refers to the chance that the actual return on an investment may differ from the expected return. It's the possibility of losing some or even all of your initial investment. On the flip side, return is the gain or loss made on an investment. It's what you, as an investor, get out of it. This could be in the form of interest, dividends, or capital appreciation. So, in essence, risk and return are two sides of the same coin. Now, different types of investments offer different levels of risk and potential returns. Let's take stocks, for example. They have the potential for high returns, but they also carry a high level of risk. Why? Because the stock market can be unpredictable and prices can fluctuate significantly. Bonds, on the other hand, are generally considered lower risk investments. They offer more predictable returns in the form of regular interest payments. But with this lower risk comes lower potential returns. Real estate can also be a great investment option. It has the potential for both income through rental yields and capital appreciation. However, it also comes with its own unique risks, like property damage or market downturns. So, how do you navigate these risk and return considerations? Well, it all comes down to your risk tolerance or how much risk you're willing to take on in pursuit of potential returns. Some investors may be comfortable with higher risk, higher return investments, while others may prefer to play it safe with lower risk, lower return options. The key is to strike a balance that suits your individual financial goals and risk tolerance. This may involve diversifying your portfolio with a mix of different types of investments. In conclusion, understanding risk and return is not just about knowing the potential upsides and downsides of different investments. It's about understanding your own financial situation, your investment goals, and your ability to weather potential losses. Understanding risk and return is crucial in making informed investment decisions. And with this knowledge in hand, you're one step closer to becoming a savvy investor. Investing can seem daunting, but it doesn't have to be. It's common to feel a flutter of fear or a surge of uncertainty when considering dipping your toes into the waters of investing. But remember, every seasoned investor was once a beginner too, facing the same questions and fears you might be wrestling with now. One of the most common fears is the fear of loss. It's a legitimate concern, as investing does carry the risk of losing some, or even all, of your initial investment. However, it's essential to remember that risk and reward go hand in hand. Higher risk investments often come with the potential for higher returns. By diversifying your portfolio across various investments, you can reduce your risk and improve your chances of seeing positive returns in the long run. Then there's the question, is it too late for me to start investing? The answer is a resounding no. It's never too late to start investing. Whether you're in your 20s or in your 50s, there's an investment strategy that can work for you. Time is indeed a valuable asset when it comes to investing, but it's not the only factor. Consistency and a well-thought-out strategy can help you make the most of your investment journey, no matter when you start. Another common fear is the fear of the unknown. The world of investing is vast and complex, full of jargon and intricacies that can seem bewildering. But don't let that intimidate you. There are countless resources available to help you learn the ropes. Start small, take your time, and don't hesitate to seek advice from trusted financial advisors. Finally, you might be wondering, do I have enough money to invest? The truth is, you don't need a fortune to start investing. Many investment platforms allow you to start with small amounts. The key is to start somewhere and then build from there. With the right knowledge and strategy, investing is less intimidating than it appears. So take a deep breath, do your research, and remember, every great investor started somewhere. You've got this. Ready to take the fast lane to wealth growth? Buckle up, because we're about to supercharge your investing journey. Fast lane investing is not about overnight riches or chasing the latest investment fad. It's about understanding the market, making informed decisions, and leveraging strategic investments to accelerate your wealth growth. It's about using the power of compound interest, diversification, and time to your advantage. Think of fast lane investing as a high-speed highway. You wouldn't drive on it without a clear understanding of the rules of the road and the condition of your vehicle. Similarly, you wouldn't dive into fast lane investing without a solid financial foundation and a well-crafted investment strategy. So how does one enter this fast lane? The first step is understanding your financial goals. Are you saving for a house, your retirement, or your children's education? Once you've identified your goals, you can start aligning your investments accordingly. Next, you need to diversify your portfolio. This means investing in a mix of assets like stocks, bonds, and real estate. Diversification helps reduce risk while maximizing potential returns. Then consider the power of compound interest. Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it." By reinvesting your earnings, you're essentially earning interest on your interest, which can significantly speed up your wealth growth. Finally, be patient. Wealth growth takes time. There are no shortcuts, but with strategic investing, you can certainly speed up the process. Remember, the goal of fast lane investing is not to get rich quick, but to build sustainable wealth over time. Fast lane investing is about making smart, informed decisions to speed up your wealth growth. So, ready to hit the road and rev up your financial engine? Let's shift into gear and accelerate towards a future of financial freedom. Now you're equipped with the basics of investing. We've journeyed from understanding the philosophy behind investing through the various types of investment opportunities and into the terrain of risk and return considerations. We've navigated the common fears and questions about investing, and we've looked at the concept of fast lane investing. Let's take a moment to recap. We started by grounding ourselves in the philosophy of investing, underlining the importance of building a robust financial foundation. It's about putting your money to work, creating additional streams of income beyond your day job, and setting yourself up for financial freedom. We then ventured into the world of different investment opportunities. Stocks, bonds, real estate, each with its unique set of advantages and dynamics. Understanding these options is key to making informed investment decisions that align with your financial goals and risk tolerance. Speaking of risk, we dove into the crucial balance between risk and return. Remember, higher potential returns often come with higher risks. It's all about finding the sweet spot that matches your comfort level and financial objectives. Addressing common fears and questions, we've debunked myths and provided solutions. Investing isn't gambling, it's a calculated strategy based on research, understanding, and patience. And remember, it's never too late or too early to start investing. The best time is now. Lastly, we touched on fast lane investing, a concept that focuses on creating wealth quickly through high-risk, high-reward opportunities. But remember, fast lane investing isn't for everyone. It requires a keen understanding of the market, an appetite for risk, and the financial stability to weather potential losses. So there you have it, a whistle-stop tour of investing basics. But remember, this is just the beginning. As you continue your journey, you'll learn, adapt, and grow, refining your strategies and honing your instincts. Interested in growing your wealth? Hit subscribe and explore more investment insights. In the next video, we'll dive into crafting your investment portfolio. That's it for today's guide on investing. We hope that you found this journey informative and inspiring. Remember, investing is a lifelong journey. It's not a get-rich-quick scheme, it's a strategy for long-term wealth creation. And like any journey, it's always better when you're not alone. That's why we're here, providing you with the knowledge and tools you need to navigate the investing landscape. So if you found this video helpful, consider subscribing to our channel. We've got plenty more insightful content coming your way. Stay tuned for our next video, where we'll be diving into the nitty-gritty of building a diversified investment portfolio. This is a crucial step in any investor's journey, and we're excited to guide you through it. So don't forget to hit the subscribe button and turn on notifications. That way, you won't miss out on any of our future videos. We're looking forward to seeing you in the next video. Until then, happy investing! Before we wrap up today's video, we have an exciting announcement to make. In our next video, we'll be taking a deep dive into building a diversified investment portfolio. This is a topic that every investor, whether beginner or seasoned, should be familiar with. We'll be exploring how you can spread your investments across various asset classes to minimize risk and maximize returns. This will be a comprehensive guide to help you make informed decisions about your investments. So, if you're looking to take your investing journey to the next level, you definitely won't want to miss it. Don't forget to subscribe and hit the notification bell to stay updated. We're looking forward to guiding you further along in your investment journey. See you in the next video.